Welcome to the second part of Accounting for Partnership Firms, Partnership Deed. Partnership deed is an agreement. That is, partnership comes into existence through an agreement. We have already studied in the definition of the partnership that there should be an agreement. That relation comes into existence when the agreement come into existence. This agreement may be verbal or in writing. It is not compulsory that it should be in writing, maybe in oral also. But if it is in writing, then it is called, that agreement is called partnership deed. It is better to have a written agreement to avoid the disputes, because in the agreement, all the things will be there about the duties and powers and everything will be there. And it can be duly signed and registered under the Partnership Act. Partnership deed is the written agreement which specifies the terms and conditions that governs the partnership. And another name for this is articles of partnership. So the terms and conditions under which this relationship is there, it will be mentioned in writing in partnership deed. Let us see what about the contents of the partnership deed. The firm's name will be given and the description, name and address will be given in the partnership deed. Then partners description, who are all the partners, whether there is any minor partner, and everything will be given, and their names and addresses of the partners will be given. Then principal place of business, where the business is to be conducted, will be given in this deed. And what is the nature of this business, and when this business is to start, and the about the capital contribution, the amount of capital to be contributed by each partner, and whether the capital accounts will be fixed or fluctuating will be mentioned in the partnership deed. Then rate of interest on loan taken by partners from the firm and vice versa will be given. Rate of interest, if any, to be allowed on capitals of partners will be mentioned. The ratio in which profits and losses are to be divided among the partners will be clearly defined. Salaries, commission, etc., if payable to any partner, will also be given in the deed. The manner in which account of partner shall be settled in case of his retirement or death or dissolution of the firm will be mentioned. Then how the assets are to be valued, how the goodwill and other tangible and intangible assets of the firm shall be valued at the time of reconstitution will be given. Accounting period, whether we are taking the financial year as the accounting period or the calendar year. Then rights and duties will be mentioned clearly so that there will not be any discrepancy. Then regarding the operation of bank account, who are all the signatories, like that it will be mentioned. Then method of settlement of disputes among the partners, if any, will be mentioned. Then auditors appointment, etc., will be given. So whatever is needed, all these things will be in writing in partnership. The importance of partnership deed comes when a legal discrepancy comes, because this is an important legal document. It can be produced in the court, and this regulates the rights, duties and liabilities of each partner so that there will not be any confusion. The partnership is a relation between the partners who come into an agreement. So, different persons are coming into an agreement to conduct a lawful business. Then there will be difference of opinion also. So, there should be a common conscience. For this matter, this partnership deed is very good. And suppose if there is no partnership deed, then or if the partnership deed is silent about some of the provisions, then the provisions of Indian Partnership Act 1932 will apply. Let us see what all things are coming under this. Profit sharing ratio. If the partnership deed is silent about this, then the profits and losses are to be shared equally. Because otherwise, in the partnership deed, it will be written what is the ratio uh, to be followed. But if it is silent in the partnership deed, or if there is no partnership deed, then the profit or losses will be shared equally. About the interest on capital, no interest on capital will be allowed. Interest on drawings, the same case, no interest will be charged on drawings. But in the case of interest on loan, if it is silent in the partnership deed or in the absence of a partnership deed, then it is payable at 6% per annum, even if there are losses. So, interest on loan as a charge against profit. About the salary or commission to a partner, it will not be paid if the partnership deed is silent or in the absence of a partnership deed. Some of the other important provisions of Indian Partnership Act 1932 are the following. In the case of a minor's admission, a minor will be admitted only with the consent of all the partners, like the admission of any other partner. For the admission of major partner also, the consent of all the partners should be there. About the retirement of a partner, it should also be with the consent of all the partners. Dissolution of the partner firm, unless otherwise agreed by partners, a firm may dissolve on the death of a partner. Suppose if the death of a partner occurs, then partnership firm will be dissolved. Registration is not compulsory, it is optional. And every partner has a right to take part in the conduct of the business. Every partner must pay to the firm the personal profits earned by him from any transaction of the firm or from the use of firm's property or from competing business. As we all know, the nature of liability, it is unlimited. The liability of a partner is unlimited. Unlimited liability means that liability of the partner is jointly and several. Whatever the liability is there, it should be borne upon these partners. Now let us do one problem. A, B and C are partners in a firm. They do not have a partnership deed. How will you settle the disputes in the given situations? First one is A, who has contributed more capital than other partners, demands interest on capital at 10% per annum, but B and C do not agree with him. Because A is demanding this because he has contributed more capital. But this we cannot allow because there is no partnership deed. In the absence of the partnership deed, provisions of Indian Partnership Act 1932 will apply, and thus then there is no need to pay the interest on capital. Second case, B has devoted full time to run the business and demands a salary of rupees 5,000 per month, but A and C do not agree with him. Again, in the absence of the partnership deed, the remuneration is not able to be paid. Then C demands interest on loan of 50,000 advanced by him at the market rate of interest, which is 12% per annum. According to the provisions of Indian Partnership Act 1932, In the absence of partnership deed, we have to give 6% interest. So C is eligible to get an interest of rupees 3,000, that is 50,000 into 6 by 100. Next case is A has withdrawn rupees 10,000 from the firm for personal use. B and C demand that interest should be charged at 10% per annum. It's a case of drawings, interest on drawings. In the absence of the partnership deed, it will not be charged. Fifth cases, net profit before taking into account any of the above claims amounted to rupees 50,000 at the end of the first year of the business. A demands share of profits in the capital ratio. Net profit before taking into account any of the above claims amounted to rupees 50,000. Here in the out of the four cases, one case we have to give, that is interest on loan. At 6% we have to give, that is rupees 3,000. So that has to be deducted from this 50,000. And that is the divisible profit. So first of all, we have to find out the divisible profit by deducting 3,000 from 50,000. And again, A demands share of profits in the capital ratio. A is demanding that because he has put in more amount. But in the absence of the partnership deed, we cannot allow it. So that is to be distributed equally. In the absence of the partnership deed, or if the partnership deed is silent in this case of profit sharing ratio, then the profit has to be distributed equally. I believe that you have understood about partnership deed. So let us wait for the part 3, that is profit and loss appropriation account. That will be the next class. Please go through the video again and again and understand it properly. Thank you very much. If you have liked the classes, please subscribe to my channel Debit and Credit. Thank you. Thank you once more.